All right, if you're someone that trades the NASDAQ futures or possibly even the E-mini S&P 500, look, I'm going to show you today how I actually draw up my supply and demand zones, okay? Is it the correct way? It depends on you and how you actually trade. The way I draw mine may be slightly different than how you draw yours, but that is just fine. Whatever the system is and how you trade supply and demand and it actually works, please continue to do so. But I'm going to show you my personal approach and how I go about drawing these zones up right here using Ninjatrader. If you are a platform user here, and I use range-based charts because they tend to give me a little bit better, allow me to see the volume better. I say that, okay? So I'm able to see, the bullish moves and the bearish moves. I'm able to see the momentum pushing to the upside or to the downside. But I love to trade high probability setups. I try to stay my best away from engaging where the market is pulling back to, let's say, a supply zone where there's low probability, okay, or a demand zone, right? So when it comes to the NASDAQ, because that's what I have up now, this chart here, it's simple. And the strategy and how I trade is very simple in itself. It's nothing complex. If you know anything about top-down analysis, starting with the higher time frame or higher base chart to determine which way the market is trending or moving, that's basically what I do. I like to use my higher base chart to determine, should I be going long or should I be taking short entries or scalps going to the downside, all right? So if we're bullish to the upside, I'm only interested in looking at those and identifying the aggressive areas in which the market was pushing strong to the upside, like right here, okay? This is a demand zone, but I want to see one thing that really stands out when I trade. I have to have what's called a break of structure, all right? Now, the way I go about marking up my zones or drawing them up is very simple, so please kind of just pay attention. I'm not going to make this long-winded in any nature or any kind of fashion. First and foremost, we got to identify the market direction, right? So if I identify where there was like a major high at, for example, because if you trade based upon like major lows and major highs and wait for them to break those areas of structure, your chances of getting into a high probability trade, one that's really going to kick off and work very well, is going to be greater. I'll say that now, versus trading where you just have a minor breaker structure, right? So if you notice prior to here, you can see the market was doing what? Making higher highs and higher lows to the upside. So we have a high that was made right here, pull back, a high that was made right here, which broke that high, and then a high that was made right here that broke this high. And then the market did what? On June 11th, we started moving to the downside. Lows, lower highs, lows. Nice push or retracement back to the upside, but we never took out this high. And then we did what? We broke structure lower. Came back, pulled back or retraced, broke structure again. Now, this was a turning point, which was yesterday, from when the market flipped from being bearish back to bullish to the upside. When we are breaking structure higher, making higher highs and higher lows, I'm only interested in going long. Now, again, there are multiple areas where there could be minor structure points to back to the upside. Case in point, like right here, that was one. All right, and let's see here. Even like right here, this one was already taken out when it ran up to the upside right here, and even above these areas here. So this is a major high right here, a minor high right here. Okay, and actually that was already taken out, so we're going to kind of cancel that one or delete that one. So major high, minor high right here. Okay, so when the market shifts back to the upside, these could be areas of minor highs just as well as we're breaking structure going to the upside. Again, major and minor areas of structure that have broken to the upside, these are going to be your key signal points to really look forward to engage in going long. Now, this is off of a higher base or higher time frame chart, so you got to imagine this just as well. If the market is breaking structure on a higher time frame chart and it pulls back to a beautiful area of, say, demand, in this case here, it's going to more than likely really break to the upside. And I mentioned that in today's video, which was the live recorded trading session video for all the ultra elite members. And if you're interested in joining, I'll talk about that here shortly at the end of the video, because it's very inexpensive and it could be game changing to the way that you actually trade and the way you see the market, read the markets. It can be very beneficial and help you out to where you can say, hey, I'm on my way to start making money now and becoming profitable. Now, Again, we're talking about high probability setups, all right? So if the market breaks a major area of structure, okay, those are going to be the best opportunities and points in which you really want to take a trade at. The market broke a major high right here on the 120 range chart. Now, I'm not taking my trades from a 120 range chart, but I do mark up higher time frame zones because I like to see if the market's going to come back to them, and I then look for an opportunity to go long off of my entry chart, which is my 24 range chart. So that's multi-chart confluence, looking for, where the market may pull back to a key area of demand, all right, or supply, and then on the higher time frame, mark it up and then move down to the lower time frame. So if you're interested in a strategy, that's what I'm talking about. If you may want to become an ultra elite member or an elite member, and I'll talk about that again towards the end of the video, because that's where really the sauce, the meat and potatoes of everything that I go over surrounding the strategy is covered within pretty much. Okay, it goes into great detail. Now, the way I draw my zones. Okay, so if we got to break a structure above a major high, this is I'm just showing you this on the higher time frame. But again, the same way I draw it up no matter what the chart is, no matter what the market is, right here on Ninjatrader. So the market breaks that area of structure, and this I'm gonna put this right here because this still denotes a major high being broken. This swing right here broke to the upside, okay? And it broke above this blue line, which was that major high, right? So this is a beautiful area of demand. What's demand? Aggressive buying to the upside. Now, the way I'll draw my zones, for an example, I'll show you both a demand and supply zone, is it's got to be a high probability. There must be a break of structure. So push up, pull back, okay? We got a nice swing, a decent swing on the higher time frame, and break structure above this high, and we took out that major high to the left hand side of the chart, right? So that's a major structure break. Now, what makes it high probability is where there is a gap, all right? So when the market made a higher low here, and then it broke structure to the upside, pretty much the last down bearish candle in this little swing swing right here back to the upside after it broke this area of structure right here. This candle here was the candle that broke above that last down bearish candle right here. So, that's what I'm going to mark, or how I start identifying which candle broke and made the move with the momentum shift to the upside. Right here, and then this one broke above. It's the very next candle. So after the candle that breaks above the last down bearish candle, because this is an example of demand, the very next candle I'm looking at to see how far did it come back, including the wick. Well, this candle broke above. This one here, it only came back this far. So there's basically an imbalance or gap that's rested in between this area here and back where the zone is at. The way I draw the zone is if I take that last down bearish candle from the top end of the bearish candle, okay, the wick, to include the wick, down to the bottom end. Make sure I'm drawing this correctly so you can see it. Down to the bottom end. In this case here, it'd be the bottom end of that bullish candle right there, because that bullish candle slightly dipped right below that bearish candle. So I'm going to include that just as well. Okay. Simple put, top end of the bearish candle, bottom end of the bearish candle. If there's not a bullish candle that drops below that, okay, or wicks below that, in this case here, we do have one. So I mark the bottom of that bullish candle as well to the top end of that bearish candle, and I'll carry it out pretty much, and I'll wait for the market to come back and tap that demand zone right there. Beautiful area of demand, because from there, look what happened at 7:30 this morning. The market went all the way back up here and broke this area structure broke this high, which at that point we have we have a structural break to the upside. So just imagine getting in this trade here around about 22,280 and taking it up here to that's 100 points right there, pretty much. After it broke this area, once it broke this area structure right here, okay? Now, I'm not saying you're going to be able to catch all that, especially on a lower time frame, because the market rule, it has its pushes, pullbacks. But that's how I draw my supplies, my demand zones. Top end of the bearish candle, bottom end of the bearish candle, or if you have that bullish candle that drops below it, then include that just as well. Now, let's talk about a supply setup right quick. All right, so right here, you can see where the market is. We got this bearish run to the downside. Lows, lower highs, lows, lower highs, breaking structure. Nice pullback, and then it breaks more structure, comes to the downside right here, below these lows right here, okay? This is a supply area, okay? The way you draw the supply up is inverse to what I just showed you in a demand setup. So it'll be like the last bullish candle to the upside, which would be this one right here, okay? That big bullish candle right there. So it's going to be from you draw from, say, if you want to do this, the bottom end of the bullish candle there to the top end of the bullish candle. And if there's a candle or wick of a bearish candle that close it, not close above, but breaks above it to include that as well. So I'm going to take this away and we'll redraw this right quick. Okay. So I'll go up here. I'm going to get a rectangle. So basically, let's do it from this. Let's do it from this angle here. Let's do it from the top end. Let's do it from the bottom end. We'll do it this way. Bottom end of the bullish candle to include the wick. This would be the top end right here, right? But because we have this red candle, the bearish candle that slightly breaks above it, I'm going to include the top end of that one as well. And then I'll drag it out. Okay. That's how I do it. The bottom end of the bullish candle, top end of the bullish candle. If there's a bearish candle that breaks slightly above it, then include that as well. That's how I draw up my supply zone there. So you see when the market comes back into it, it rejects it and push lower to the downside. Now there's other things that I look at in reference to that I like to see when the market retraces back to an actual zone that I have drawn up. In reference to how far did it actually move into that zone? Did it close inside that zone? Did it wick at the zone? Because that allows me or helps me get, really concretely confirm should I be taking this trade or not, because I love to see where the market is pulling back to a zone and then it doesn't close in that zone, but it wicks away from it. When it starts closing too deep into the zone, then that kind of, I'm questionable about it, because the fact is the market may kind of want to break higher. But we're breaking structure here to the downside, because if I look to the left-hand side, you can see we're lows, lower highs, lows, lower highs, lows. We're breaking structure here. So we're taking out structure here to the right, but also structure to the left. So we're definitely bearish to the downside. Lows, lower highs, breaking more, decent retracement, and then breaking more structure to the downside, okay? So that's how I draw up my actual supply zones. If you want more information or more detailed content surrounding, the strategy, how I trade when it comes, or the market traces back to these zones, what to look for when it comes to in reference to structure, market structure, and price action, you may want to become either an elite or an ultra elite member. It's very inexpensive. The link is down in the description portion of the video. If you're interested in becoming an elite member, I'm going to tell you how inexpensive it is. It's only $6.99 a month. That's like 24 to 25 cents on the day. Think about how much you may spend on your price of cups of your coffee each day. That probably adds up if you stop stopping at, I don't know, Dunkin' Donuts or your favorite coffee shop or coffee house. Just think about how much you're spending per day. Here's something for just $6.99 a month that can be very beneficial and help you as a trader, because what you receive in reference to in becoming an elite member, you receive my trade breakdowns, the video playlist, and a great video that I covered on market structure. There are tons of trade breakdown videos already on the channel for that private community. If you become a private member by being an elite member, within that, okay, I walk you through setups that I post over on our Discord. And yes, the Discord is free by anyone, by chance that anyone wants to join it. The link is down in the description. The first link, Discord, click on it, join. Okay, free. Now, to become an elite member, it's the second link right below that that's titled Ultra Elite Supporter. Once you click on that, 3 tiers will pop up. Choose either the elite or the ultra elite tier. Okay, if you want the trade breakdowns, the video playlist, and the market structure videos, the market structure video, that's only $6.99 a month. There's tons of trade breakdowns where you can watch the video content where I walk you through trades that I've taken. Okay, I explain in detail why I took those trades in reference to structure, in reference to price action, in reference to where to take your stop at or place your stop at, where to look for profit areas of target areas, things of that nature. They help you clearly be able to look at the markets from a different perspective and look for those same similar type setups on your own charts when you're back testing and forward testing. Now, if you want to become an ultra elite member, you receive everything that I just discussed in becoming an elite member. Plus, you receive my live recorded trading sessions, where they're full-on sessions where you can see me watch, engage as I'm taking these trades. They're recorded, but I go back and well, not say I go back, but I'm actually recording my sessions as I am trading myself during the New York session or pre-market. Okay, so that's where you can capture and look and view and see the trades that I'm actually taking as I'm walking you through, the session itself in reference to structure. Okay, very, very important. That has helped a lot of people out, because they're trading this as well, and they can watch the video, and say that, okay, during my session here, yep, that was a good setup that I took as well. I see that Mike took it just as well. So I'm talking about structure as the market is going on, things that I'm looking for, things that I'm interested in, things that I'm not interested in. which is like when the market is chopping, moving sideways, like today, for example. We went sideways for a period of time this morning, pretty much all morning session. So today was probably not the best opportunity for one to be looking for setups on the higher time frame, but you can scale down to a lower time frame like the 24 range chart, because I trade range charts, and look for opportunities just as well as I did. Okay, I only took one trade today, but that's all I needed. I did identify some other areas after my trading session, because I'm typically done, somewhere between well, if it's pre-market, 7:30 to 9, and then between 9:30 and 11 o'clock. But yeah, if you want to become an an elite member, either the basic elite tier or an ultra elite member, the link is down in the description portion of the video. It's very inexpensive, like I said, to join per month, and it has helped a lot of people out, because there's a lot of educational or a lot of great video content there where I'm sharing my personal strategy and how I actually trade, but I'm walking you through my mindset as I'm taking these trades. So hopefully you understand that, okay? But outside of that, that's all I have for you today. If you haven't already clicked that subscribe button, please take the time to go ahead and click the sub button now. Make sure to click that thumbs up button right now if you have not already done so and you found value in today's video, especially for all my new beginners out there and new viewers out there that are looking for content like this on the correct way of going about drawing up supply and demand zone. So I hope this helped you out. Take care. I'll see everyone in the next one.